Hello YouTube, today is May 1st, so we're going to go over how our Roth IRA did in April. So you can currently see the value is at 16,610. For the day, we're up 0.99%, after hours down 0.46% after Amazon reported earnings. They did good on the earnings, but they have a bleak forecast, and Amazon represents a lot of the economy, as in they see how consumer spending works, so that's a point of concern. Now let's just get through because there's a lot of news going on. So first of all, we put a $500 deposit into our account this month. And if we go over how we did in the last month, you're going to see why. So we had a lot of tariff news come out, and Donald Trump had Liberation Day. And over the next 3 days, we just dropped 10%, 12% in the market. And we can continue to go down. I mean, you can see our portfolio touched $14,600, which is incredibly low, especially over the last year of gains we've seen. And then up from there, it's actually rebounded quite a bit. But about, let's see, I think April 8th, we put in that $500 deposit, 150 into Google, and then the remaining 350 between QQQM, more on that, and then VU also. And I did that because QQQM was just getting hammered. I mean, tech stocks were just flying down. And Google, I already liked the value that was at. So if it dropped down 20%, which it did, I was like, this is a great time to buy. So I put $150 in, and we'll look at our position for that. But it was incredible to see the rebound that happened throughout the month. So I don't have to report that our portfolio is just still down a bunch. It's actually up over the last month, which is very nice to see. So up 1.31%. Over the last 3 months, down 6.45%, which makes sense. That's about what we saw since the election. And then, I mean, yeah, we can see up here, with that 500, we would have been at 18,300, but we're currently at 16,600. So we still got about $1,700 worth of losses that we're trying to recoup on. But compared to where we were, and we're down like $4,000. I mean, I'm quite happy with it. Yeah, there's definitely some space that we got to work at, claw back our gains. But I think I bought in at a great time. I lowered my cost average on Google quite a bit, and now it's profitable. And I brought down, although I raised my cost on QQQM and VU, I mean, I got it at a great price, and it's already rebounding back quite a bit. So, yeah, we had that tariff news, and you can look at an article here on Temu. They actually started implementing these tariffs because they're not able to eat the cost, quite frankly. So, I mean, we can see that here the purchase was $20.48, and the import charges alone were $29.02, over doubling the cost of the order. And that's because China has 140% tariff on it. So that's going to hurt the economy quite a bit right now, it looks like, especially people that normally have to import from China to gain their products. But that is intentional, although I don't agree with it. It's intentional, so we all saw it coming, basically. But the last GDP report came out for month over month, and it was down 0.3% growth, well, quarter over quarter. So that's our first retraction in 3 years. We saw one of Q1 2022, so exactly 3 years ago. So that's quite bleak news, but the market kind of ignored it, which is interesting, and they just moved forward. So let's look at our Google position here, because I did say we bought some. You can see now we have $245 worth of Google, and before we were down 18% maybe, and that's just because we kept buying in, but the price just kept flying down. So when it went down incredibly this month, I bought $150. We only had 94 before. And now we can see that the total return says we're up $3.20, or 1.33%, which is I'm actually quite happy with. I mean, if we look at the last month, we can see that the price bottomed out at 144, and now it's at 161. So we were buying in at a little bit of a higher price, even though I thought it was still undervalued, but we know that the price did touch 206 before, so we're not anywhere near all-time highs. I mean, we can go up 25% and still not hit them. And I mean, I believe there's a Morningstar valuation down here. But yeah, fair value, they indicate $237. I mean, Google has just an absolutely robust balance sheet and revenue, so I don't have any concerns here. I mean, they had their recent report and they beat on earnings. You can see a spike in the valuation here. But even after that, the price still came down a bit. So for some reason, the public is very bearish on Google, even though across every metric they're doing great. every single metric. But I mean, we can see here, revenue came out to be 90.23 billion versus 89.12 billion. EPS came out to be 2.81 versus 2.01, which just is an incredible beat. That's a beat by 40%, which is just really unexpected. We knew Google would probably do well, but that is pretty incredible. YouTube advertising revenue went from 8.93 billion versus 8.97, so very close to hitting on that. Google Cloud revenue 12.26 versus 12.27, and traffic acquisition costs (TAC) 13.75 billion versus 13.66 billion. So all these metrics are very close to what they're expecting. So a lot of it was in line, but revenue and earnings per share just beat out, and that was very bullish for the company. It was very unexpected too. And then before we get into another stock breakdown, we're just going to look at some high performers this month. Microsoft had a report, and again, this is a company where if it does good, it's normally pretty good for indicating how the economy is doing. This is more of the business world. So you can see that they had the report, and they jumped up 9%. I mean, the report came out last night, so they were up about 9%, 10%. So that was incredible. Currently, Microsoft is the biggest company in the world right now, surpassed Apple. That was not on my 2025 bingo card, but we love to see it nonetheless. Now, if we pull on Meta, the parent company of Facebook, we can see that they beat on their earnings as well. They're up 4% for the day, 10.45% for the week, and that even over the last month, they're still down a little bit, but allow them to regain a lot of their traction. 3 months are down quite a bit. Year to date, it's not as bad. So Meta's been an interesting spot right now. A little bit of a bounce back, although they're still struggling from post-election losses. So now a company I want to look at, we're on their platform, but I do love the stock in general, is Robinhood. You can see that they're down quite a bit today, which is interesting. But I mean, they beat on their earnings, they had great metrics, and they were flying up. So not quite sure why they're down today. That's interesting to see. But we can see some of their metrics. Total revenue increased 50% year over year to 927 million. Transaction-based revenue increased 77% year over year. Net interest revenues increased 14% year over year. And other revenues increased 54% year over year. Net income increased 114% year over year. Let's see, we got total operating expenses increased 21%. So I mean, you got a total increase of revenue of 50%, operating expenses increased 21%. So we're liking that difference there. It means they're going to get more profit out of what they're investing in. Net deposits at 18 billion, which is a 37% growth rate. I mean, that's just great to see. Average revenue per user increased 39% year over year. So we're seeing all this kind of work together, and I talked about the gold program in the last video, that they're doing all these steps to get everyone on their platform. They're eating a lot of that upfront cost, giving transaction bonuses over. They have very aggressive programs on gold, offering more products, and what this is translating to is everyone bringing more and more money over to Robinhood. And when they have more money in there, Robinhood's going to profit off of equity trade, and they're going to profit off of margin lending. I mean, future contracts, people buying that in, event contracts, people buying into that, crypto exchange costs, all over. So everything that their company is running to gain profit, all these people that are coming in, it's directly translating over to the company, and the revenue's flying. So I know I bought this company. I mean, look, a year ago, oh my gosh, it had to be like $28 I bought it at, which is incredible. So it might have been even lower. But we bought this a while ago, and I was quite bullish on it, and I sold because we saw a lot of gains really fast. But I mean, yeah, I think we bought down here at 24. But nonetheless, I mean, it's been great seeing how it's riding. Maybe it's worth a second glance. Even though it's came up so much, that's no reason to be discouraged if the financials are great. We're seeing great growth measures. In fall, they're releasing their banking program, which is for gold members. They got their Robinhood Cortex implementing their AI in-house. All these great things, which I'm just loving to see. You're looking for a company that is innovative, on the cutting edge of technology, increasing their revenue, increasing their user base. And when it comes down to it, they have a huge user base that they can acquire. I mean, they're even talking about getting into 401ks one day and stuff like that. So I think this company is just under so many people's radar. People might treat it as like a meme stock, trading it on the volatility, trading it on options. But I think it's just being simply overlooked. This company has just amazing metrics. The growth is phenomenal. You barely see that at any company, and they're just flying off the rails. So I'm very happy to be on this platform. I know people are giving a bit of a hard time, as always, after the whole GameStop fiasco. People can't quite let it go, and I wish they would, because I think they're missing out on a lot of opportunity here. So now to close, let's look at our investing account spreadsheet. So we can see here I messed with the portfolio value. Last month we saw a major dip. We went from 16,800 to 15,838. And at the end of April, which I recorded this amount, we were at 16,518, contributions of 12,545. And that's compared to a SPY value of what would have been 16,348 if we mimicked every single buy since the incorporation of this portfolio. So we can see the profit over here. I did add some red lines that represent moving averages to see how this is all going. Although it's pretty straightforward that we're seeing profit fly. I mean, we saw a lot of it in the last 2 years. Love to see that, but we did take a huge step back that last month. But we went up from, let's see, last month to this month about $170 a profit. I'll take it, especially considering we were down 10% over the course of a couple weeks. So it feels good ending the month on a high note. You can see the difference between our portfolio and SPY right here. And last month we actually did go negative because of the great drop in QQQ. And I'm sure if we took it in the middle of the month, we would have been negative as well. But because of the recent comeback, and I think our purchase in Google, that definitely didn't hurt us. It just saw a great increase and faster than what the market recovered at. We're up 170 versus SPYs, so we are outperforming the market still. It feels great to see. I mean, we're seeing that on the later end of this portfolio when I started implementing QQQM, and that's just probably because of beta, but I hope in the future it's going to be from better stock choices like Google and other positions I'm looking at. So we can see open positions here. We got QQQM, VU, Google. We got our 4.0 plus Fed rate event contract in the brokerage account. But we can see that the portfolio ended the day 16,683. Got our contributions here, so that's over $4,000 worth of profit. Love to see that number. Let's get back up to 6,000 eventually, but for now, more than happy with it. I did want to mention that I did have a gas event contract, which is very interesting. That said, as of the end of yesterday, gas prices would be above $3. Would be below $3.20 overall because I said no to this contract, but the contract was for over. I put $26 worth of it. The cost basis at 95 cents, so it was a high favorite. It was 93 cents a buy-in, 2 cents transaction fee. But I got a $1.30 profit out of it, which is a 5% gain, and I only held it for 9 days. So these kind of buying opportunities I love seeing. I mean, I looked at the AAA graph. I saw how prices were moving, and I said, hey, although it's at 93%, I think it's just way less likely. This is a positive EV buy. I bought into it, I got a quick $1.30 out of it. Maybe I'll look at some other event contracts, but nonetheless, very happy with it. I'm still holding these Fed rate contracts that's saying we can have a 0.25% base cut and we'll still be fine, but as soon as it's 2%, 2.25% base cut, so 0.5%, the contract will lose out. And our cost basis for that is, let's see, 94 cents. The buy-in was 92 cents. But this will clear up during May at this next Fed meeting. I'm expecting for rates to hold. I'm pretty confident about that. But there is a chance that they would cut. I mean, I don't know, though. With all the tariff news, I really just don't think they would cut. I think inflation will probably come back up from that. Fed knows that. They were already hesitant on moving. But then, I mean, tariff and Liberation Day were just a little more than what was expected. I think we'll be fine. So I'm looking forward to these event contracts. I think we'll talk about them more in the next video, so tune into that. We can see total contributions, 12,545. Here's the breakdown for the years. And what I did like about this year is that we've contributed more this year than any other year in the past. And I'm planning for this year to be a max out because I graduate next week. And I got some very aggressive plans to invest quick. I want this portfolio to hit 20,000 ASAP. So we're going to get quite aggressive on it. But I'm feeling very, very good about where our portfolio stands. I think we're at great position. We're getting great buys in. We're looking at companies finally, which is something I wanted to do. I think more buys to come on Google, especially when I start getting my deposits coming in this following month. So tune in the next video. Thank you for listening to this one. I really do appreciate it. Trying my best here. We're learning things here left and right. I'm trying to learn things so I can talk about them in the video. And we're going together on this journey. So thank you for tuning in. Make sure to like the video, subscribe, share with your friends, your teachers, your parents, and ask any questions in the comments. I'll be more than happy to answer them.